There is really no reason for Janet Yellen's speech on Friday to not signal the Fed is ready to raise interest rates. Claus Vistesen, Pantheon Macroeconomics. Firstly then, second quarter growth for the UK and Germany is out this week, with the European nations reportedly expecting to grow by 0.6% and 0.4% on a quarterly basis respectively. What then are you expecting from these data releases?
Well, I think those two headline numbers you mentioned, 0.6 and 0.4, are probably going to be confirmed. These are sort of the second estimate we get from the GDP, so there can still be changes at the margin, but I don't think there'll be any major changes. Obviously, in many ways, GDP data, especially the second and third estimates, are backward-looking, so these data will tell us what happened in the second quarter, give a little bit more detail. But obviously the most important thing is what's going to happen in the third quarter, where in the UK economy, the expectations widely is that there's going to be some kind of a slowdown following Brexit, particularly in investment, where many firms might delay investment and capex decisions or even hiring decisions. So that's what the market will be looking for, I think, going ahead. So even though the 0.6 headline in the UK is going to look very, very, very nice and is actually quite good, it's going to be it's going to be pre-Brexit, and therefore, I don't think it's going to have much to say in terms of how the market moves. Germany, actually 0.4 is a quite good number relative to how strong growth was in the first quarter. We know in Germany that investment, especially in the construction sector, slowed quite sharply in the second quarter, but the headline suggests that net exports rebounded very strongly. So that's one of the things I'm going to be looking for, as well as I think that government consumption continued to grow strongly in the second quarter, which is a bit of a paradox given the story in Germany at the moment that the German government's not spending enough. But this is because that last year Germany had a larger surplus than it expected. That leaves more money to spend this year, so that's why government spending has been high in Germany. So actually, I think these two reports are going to be quite positive, but they are to some extent telling yesterday's story.
Okay, well, Janet Yellen is due to make a speech in Wyoming on Friday, which could give further clues as to when and if the US will hike rates this year. Some analysts remain sceptical that Ms. Yellen will show a hand, though what is your assessment?
Here at Pantheon, we expect the Fed to raise interest rates this year, and the third quarter could be quite interesting in this regard, and also in terms of what Yellen's going to say on Friday, specifically in relation to the data, which were quite poor in the second quarter in the US. The US GDP were underwhelming, but actually it seems to us that the third quarter data could be much better, and that's obviously going to push both the Fed to move on rates, but it's also going to push the market's expectations into actually realizing that maybe the Fed will actually move on rates. So that's we look for an inflection point there in terms of the market's expectations. Now, naturally, the market is skeptical because the Fed has been, one step forward, two step back. That's kind of been the story with the Fed. But there's really no reason for the Friday speech not to signal to some extent that the Fed is ready to raise interest rates and will do it. But if you look at what and that's also the story that we've been telling here at Pantheon, and the data is telling quite a clear story in terms of what the Fed ought to do in terms of its historical reaction function. But because of the FOMC's desire to be very careful, they've kind of been towing a very fine line, and I would expect Yellen to do the same on Friday. But again, third quarter could be very interesting in terms of a sort of reset in the market's expectation of U.S. rate hikes, we think.
All right, and lastly for today, which other key indicators will you be looking out for through the trading week?
Yeah, obviously, just to recap, I do think that Yellen's speech on Friday, that's what everybody's looking for. In terms of the economic data, in the euro area, we have a lot of survey data coming out. We have the PMIs tomorrow, some consumer sentiment data, some money supply reports. So kind of like this week is where we get the first indications of what happened in August. We're still not out of August, but that's kind of like in the middle of the third quarter, so that's always important. I don't expect much from the survey data this week. I mean, actually, it's been very stable in the Eurozone in the last 3 months, even 6 months, so it's pretty much steady as she goes in the Eurozone with growth probably this year going to be the same as it was last year, about 1.5, 1.6%. That's also what the survey data are telling us, and there's really no reason at the moment to suggest that story is going to change, at least not this week.
Thank you, Claus. Be sure to check back to see how these market movers have developed with Celeste Skinner for our wrap-up on Friday. See you soon.